Recent valuation by audit firm KPMG placed Uchumi's shares at 17.2 shillings compared to 14.50 shillings when it was suspended from the trading floor in June 2006. However, spirited turnaround efforts coupled by the government's capital injection of 675 million shillings were some of the notable efforts in the renewal of the 31-year-old retail giant.
The lifting of the receivership coupled with additional equity injection and opening of new outlets in strategic locations and a reinvented business model is expected to support increased customer numbers and growth and creation of shareholder value.
Uchumi supermarket was indebted to the tune of over 1 billion shillings. I have been informed that the Uchumi supermarket has repaid the original loans to the banks.
Uchumi's dwindling fortunes in 2006 saw the loss of jobs for its 1,200 workers, over 1.2 billion shillings in losses, and a 2 billion debt that resulted in the company eventually being placed under receivership. Upon its recovery, the bigger challenge, however, remains ensuring the supermarket's expansion plans do not hurt its performance in an increasingly competitive market.
Our expectations are that Uchumi will continue to set pace in the retail and commercial sector.
The long wait has been a high cost for those who have been holding the stock since suspension, as evidenced by the offloading of more than 1.6 million shillings and a tumble on the first day of trading to a low of 10.80 at one point during the trading. The stock closed at 12.50, with the government, Uchumi's current biggest shareholder, intimating it will be selling off its stake in the appropriate time. 5 years is what it took from its suspension on the 31st of May 2006 to its relisting today, 31st of May 2011. Although it is these faithful customers who voted with their feet to see the telling of Kenya's true success story, that is Uchumi Supermarkets. Boni Tunya for KTN Business Today in Nairobi.